Hello to all viewers of this Ichimoku Kinko Hyo for Beginners webinar. Today, we will cover Part 4, Trading Strategies. Out of so many potential trades that you might be able to identify using the Ichimoku trading system, it would be useful for you to know which ones are worth your time and effort. Identifying the potential price targets of any trade will help you assess the risk-to-reward ratio. This will help you determine if your trade is worthwhile. It is, however, important for you to note that price potentials are possibilities and not certainties. We know that price always tends to go back to equilibrium. This means that as price moves along its trend, it will tend to revisit the average prices over a period of time. This is very much similar to the concept of moving averages. As you can see from this chart, price always tends to reattach itself to the moving averages. The moving averages represent the average of prices over time. So what are these levels of equilibrium? 4 of the Ichimoku elements measure equilibrium. The Tenkan-sen measures equilibrium for the past 9 periods. The Kijun-sen measures equilibrium for the past 26 periods. The Senko-A measures equilibrium between the Tenkan-sen and the Kijun-sen for the past 26 periods. And the Senko-B measures the equilibrium over the past 52 periods. How will this help us in our trades? Because prices will tend to reattach or return to these lines to restore equilibrium, these lines could serve as price targets or bounce-off points. Of all the Ichimoku lines, the strongest is the Senko-B line and is therefore your maximum price targets in most cases, except when the price breaks that line too. A break of the Senko-B line in any direction could possibly mean a change in trend. The Senko-B line is often a flat line, and a flat Kumo, as we learned, is a magnet to price. This chart shows that the price had been on a downtrend. However, there was a short bounce. The Senko-B was moving downward as the price moved up. The area where the price hit the Senko-B line served as the resistance. When price hit the Senko-B line, it dropped back down. I would like to illustrate how prices reacted to each of the lines on the way to our price target. In number 1, the Tenkan-sen served as the resistance to price, so price dropped back down after hitting the Tenkan-sen. In number 2, price was rejected by the Tenkan-sen and dropped back down. In number 3, price broke above the Senko span A. In 4, price retested Senko-A as the new support. In 5, price broke above the Tenkan-sen and the Kijun-sen. In 6, price was supported by the Tenkan-sen and the Kijun-sen. This is the daily chart of Advanced Micro Devices or AMD. The price is on a downtrend. Notice how every time price bounced off its lows, the price reached the Senko-A line several times along the downtrend and then it dropped back down. The last move, however, shows that the price broke above the Senko-B line, which signals bullishness. In this daily chart of Alibaba or BABA, we see the same price action at the Senko-A line. In some cases, the price exceeds the target but is unable to stay above that level. Price dropped and broke below the Kumo. Remember that flat tops and bottoms are magnets to price because they represent equilibrium at longer time frames. The price levels where there is strong resistance are those that are in confluence with higher time frames. In the previous chart, I showed you the daily chart of BABA and we saw that prices reacted to the Senko-A resistance line. Now this is the weekly chart of BABA. In this chart, we see that those points are also where the price in the weekly chart touches the Kijun-sen line, which also serves as resistance. This confluence between resistances across time frames are potential price targets. In this daily chart of Coinbase Global, we find that the price had been unable to break above the Kumo. At this point, price touched the Senko A resistance line and then consolidated within the Kumo. If price manages to break above the daily and weekly targets, your next target is the monthly resistance. This shows that after price broke above the Tenkan-sen and Kijun-sen lines, the price targeted the Senko A line in the monthly chart, and then price dropped back down after it reached that target. In this monthly chart, price broke above the Tenkan-sen and Kijun-sen lines and then targeted the Senko A and Senko B lines. It hit resistance at the Senko B line and then price dropped back down. It is now supported by the Kijun-sen line. Lesson 2, Trend Following. Ichimoku is best used for trending markets. As long as price is above the Kumo, it is on an uptrend. The Kijun-sen, Tenkan-sen, and Kumo are areas of support where we could buy shares during consolidation. The steeper the Kumo, the stronger the uptrend. Here are examples of uptrends. This is the chart of Microsoft Corporation, or MSFT. Price is trending above the Kumo and is bullish. Trend followers would hold this as long as it respects the Kumo as support. The Kumo is the medium to long-term support line. So if you're a trend follower holding Microsoft Corporation, the only thing you need to look at is whether price is still above the Kumo. There's no need for complicated technical analysis. As long as price is above the Kumo, then you must continue to hold the stock. This resulted in strong gains for those who followed that simple rule. However, in the first quarter of 2022, price showed some weakness. Price broke below the Kijun-sen line and eventually below the Kumo. This is a sign of a trend reversal from an uptrend to a downtrend. Price is currently bearish and will continue to be bearish as long as price is not able to break above the Kumo resistance. This chart of Open Door Technologies shows a strong downtrend. Price trends below its Kumo and is unable to break above the Kijun-sen line. Lesson 3, Bounce Plays. After a strong run, the average price would have been affected significantly by the increase or decrease in the price values. This causes the Kijun-sen and the Tenkan-sen to move away from each other. This indicates some disequilibrium. And this is what the C pattern looks like. When there's a C pattern, a consolidation is likely to follow. One of two things can happen. First, price will go down to force the Tenkan-sen and the Kijun-sen closer together. Second, the price moves sideways until the Kijun-sen is able to catch up with the Tenkan-sen. So this is what happens in a consolidation. This chart shows a C pattern where the Tenkan-sen and Kijun-sen have a huge gap. If there is a time consolidation, the price will simply move sideways for a longer period of time until the Kijun-sen is able to catch up with the Tenkan-sen. If there is a price consolidation, the price will move swiftly towards the Kijun-sen line before continuing with its trend. This chart of Berkshire Hathaway shows a series of C patterns. This happens in a high volatility environment. Notice where price bounces. These are indicated by the Tenkan-sen, the Kijun-sen, or the Senko lines. This chart shows a C pattern that was resolved by a drop in price towards the Kijun-sen line. This allows price to achieve equilibrium. This C pattern could also happen in strong downtrends. In this chart, the move is overextended so that the Tenkan-sen is way below the Kijun-sen line. So we expect a bounce that will bring the price towards the Tenkan-sen line. The Ichimoku elements are a great tool to use when setting price targets. In an uptrend, these can be used as bounce point and a good place to enter the market. These are also used as trail stops for position traders. In a downtrend, the Ichimoku elements can be used as resistance points where bounce players could take profits or initiate short positions. In a C pattern where the lines separate, the Ichimoku lines can be used as entry and exit points for short-term trades. Thank you very much for watching this video. Stay tuned for part 5.